Hey, this is John Howell here, founder of TradingInvesting4U.com and also featured in the best-selling book, Secrets of Stock Market Trades Exposed. Now, I want to welcome you to another edition on keeping you on top of the market. So without further ado, let's get into the education. Okay, traders, in this video, we are going to be talking about we're going to basically a bit of a look over the Apple stock, okay? AAPL is the code on the US stock market. Now, when we're looking at this particular stock here, what we're looking at here, you can see here just recently we've had a massive run up through here. So we've gone from around about sort of 380 to like 500 and something. Just a massive run up through here, an enormous run through here. You can see basically what we're looking at here is we're seeing that the actual stock market is running up here massively, okay, absolutely massively. So let's actually get out of this now, and we can see this overall move. It's just Apple's just in an amazing upward trend. We can see that clearly, right? But let's go over to the weekly chart here. And I want to show you what's going on with weekly chart, because this is quite interesting here. If you've been watching my videos for quite some time, you know that I've been explaining to you how the market works, okay? And how the market works is it doesn't just run up like that huge amount and just keep going. What happens is it'll run up and then it'll pull back and then it'll run up and then it'll pull back and run up, okay? That's why we have these, troughs and peaks and so on and so forth. Peaks and troughs, okay? Higher troughs, higher peaks. Now, the reason why I mention that is this. In looking at this overall Apple stock here, okay? It's a very expensive stock now. $500 something, or not that expensive, but $500 something, $516 now moving there. Now, let me see if I can just delete that there. Remove, there we go. Okay, so what I wanted to show you is look at this here. It actually got down to as low as, let's just delete that, to as low as around about here, which that was, if we have a look at that, that was actually around about the $85 it got down to. $85 this stock got down to, and now it's $516 after the 2008 stock market crash. Look at it just run, just absolutely just bolt to the high side. It's been a massive run to the high side with this particular stock. So most people right now, I've been hearing a lot of talk about Apple, okay? Apple's the thing, you should be getting on Apple, because as most of you know, Apple's completely like this into the high side. So what I do say is when we're looking at Apple and when we're watching this stock here, it's very important that we keep looking at the overall market as itself. If you're looking to buy Apple, I would suggest this is not a good place to get in Apple, okay? Not a good place to get in Apple. Let me explain the reason why. As you know, markets go up and then they pull back, and then they go up and then they pull back. So with that, markets goes up, market steps down, okay? It doesn't just absolutely just bolt. Now, knowing that we've got this absolute massive bolt to the high side, I would not be happy taking that, okay? Because we've already had a massive run up. If you're looking to buy any market or any stock, the worst time to buy it is when it's already taken off up through here, or it's already had a massive run up. The best time to buy it is wait for a pullback. And I would say when we're looking at pullbacks, a Fibonacci retracement, which is, let me just grab my Fibonacci retracement. So Fibonacci retracement from the low to the high. You can see that our sort of 60% level is round about here. Okay, this is our 60% level. You can see 60% level all through here, and a 50% level. I would say if you're looking to buy Apple because you like the company and you want it, you maybe want your retirement account or something like that, my general recommendation around this would be that it's very important to wait for it to pull back. And if it does pull back, this here, if you're looking to buy into it, this area here would be the most high probability to be buying into it. And the only reason why is because we're waiting for that pullback, okay? If you try to buy, if the market's dropping down through here and the market's in a downtrend, trying to buy it down here is not a good idea, okay? It's just not a good idea. If you're trying to sell it down here, it's not a good idea, okay? If you're trying to sell the market, you always got to wait for the stair step. Wait for the market to do what it does. If you're trying to sell the market goes down, Market goes back up, market goes down, market goes back up, market goes down. So what you're trying to do is you're waiting for these stair steps. When the market goes down and goes back up, if you're looking to sell into it, you sell into here and wait for the market to go down. Market goes up, starts to go back down, and you sell into it here. It's the same thing over here, right? If the market runs up and then it runs back down and runs back up and it has a huge run up through here, okay? Remember, you don't want to be buying it up here. You don't want to be buying it up here. What do you want to do? You want to wait for the market to pull back through here, okay? Which also could be potentially at the previous resistance, which is now support. What we have is this resistance, which is this resistance over here, could now be support around the Fibonacci levels, which is now support around the Fibonacci levels, okay? So that area there would be the most probability for buying into it, okay? So whether you're trading in indices, stocks, currencies, whatever, okay? T-bonds, whatever market you're trading, if you're looking to buy and sell, if you're looking for good entry points, then do that, okay? Make sure you keep an eye on those, because if the markets run up or run down too fast, don't try and get into it then. Wait for the market to stair step, and they're the probability areas to be getting into. And so if you were looking to buy this stock, again, what I'll be saying is wait for at least a retracement down towards these levels through here, okay? And if it does, then I would say to confirm that what you're looking at is good, I would then say bring in an additional filter, okay? Now the additional filter will be this. Bring up this indicators. Okay, we're going to bring up the stochastics. And what we're going to do is, if we're looking to buy this Apple stock and we're looking to get into it, the best thing we can do is once again, wait for the market to drop down through here. So I can wait for the market to drop down through here, because we're at this, look at this, resistance here, or resistance here, Fibonacci support through here. So this area here is likely to be pretty good support area. Now, if it's down through there and we're looking to get into it, the thing I would look for is are we getting stochastics? Are we getting the stochastics coming down and down here and pointing up, okay? Are we oversold? If we're oversold and the market's down here in the level, that would be a good entry point. Now, you could use this for anything. You could use this for stock trading. You could use it for option trading, currency trading, forex trading. It doesn't matter what your market you're looking at. You can use this by waiting for the pullback and waiting for the stochastics to get oversold at a support area. Because think about this. The market's run up. It's due for a pullback. Wait for the pullback into support area, into the Fibonacci levels. This support and resistance area comes into play, and now we're getting the stochastics staying turning over, okay? Look at this here, okay? Look, stochastics oversold. There it is there. Stochastics oversold. There it is there. Look at that. Stochastics well oversold. Look at that point through there. Stochastics well oversold, that whole point through there. Stochastics oversold, look at that point through there, okay? So as you can see, all these different points, look at this here, well oversold, down, boom, through there. So as you can see, when the stochastics get there, and if there was like maybe a bit of support line through here, that level there would be a good buy, and so on and so on and so on. But by having the combination, okay, this is the crucial thing here, having the combination of support and resistance, support level here, Fibonacci level here, and the stochastics down the bottom here, it's giving you a much higher level of probability. So no matter what you're trading, make sure you use that. I hope you've liked this this little tutorial, this little market tip, market update. No matter what you're doing, make sure you keep an eye out for that swing, okay? If the market's running down, you're looking to sell it to get in, wait for the stair step. Same thing here. If the market's running up, and you want to get into it, wait for a pullback. Be patient. Wait for a pullback into a good support level. Wait for the stochastics to get into an overbought level. That alone, my friends, is a complete system that you can use right now to start making or potentially moving forward and making a return and a good profit in the market, okay? No guarantees that this is going to work for you, because I don't know how you're going to use this, but I've seen this time and time again work. Combination of stochastics and support and resistance can become an amazing tool. If you like this video, make sure that you go over it again and again and again. Alright, so this is John Howe from Trading Investing For You. I am out of here. Make sure you say this to yourselves every morning, every afternoon, every evening, and that is success can be yours if you go claim it. So step up, take massive action, and face your fears today.
Since being mentored by Johnny Howe, I have found that my trading skills have grown tremendously.
John Howe is truly one of the best traders of the 21st century.
John, thank you so much for all your time in helping me to become the professional trader that I have been striving to be.
And that saw me take home $1,500 Australian after expenses in only 6 trading days.
I now know I could trade on my own and be successful at it, simply because of the way John has taught me.
Over the last 5 to 6 months, we have a 70% success rate. This is amazing considering how volatile the markets are.
But at the end of January, I was in a position where I could finally test out a couple of live trades. Nothing big, not a lot of money, but on the 2 trades I put in 1 week, I was $1,200 clear. Amazing.
And my last few trades have been fantastic.
I just wanted to say thanks, John. You've got a very, very happy camper here.
I'm absolutely positive that I'm learning the necessary skills to trade the market in any condition, and I'm also earning some money along the way, and have found John's knowledge of the markets and his enthusiasm to be fantastic.
He is always available and approachable to answer any questions we have to help us get ahead.
With your phenomenal wisdom and insight into the market, you have given me the confidence to step up and take real responsibility in my trading, and the results are starting to flood in. It really means the world to me and my family, and I cannot thank you enough.
So I really have benefited so much from being mentored by Johnny and applying the techniques that he uses, and his mentoring is second to none. Thanks, Johnny, you've really helped me.
John is the real deal.